we put you on the map. This is Ron Costa broadcasting live in the Mappable USA studios out in Las Vegas, Nevada. And folks, today we have a really interesting show. We're going to get back to a topic that we got a lot of comments on the last time we talked about this. We're talking blockchain and tokenization. And for that, let's bring in Vicky Hutchmala from the QOZ Marketplace and the World Token Market. Vicky, how are you today?
I'm excellent today, Ron, and I'm looking forward to our podcast and our guests. And this is a hot topic that we need to educate more people about its advantages and why they should be involved in it.
Exactly. I went to a golf tournament yesterday, Vicky, and you know how to get a bunch of people to look at you like you're from Mars? Tell them that you work in blockchain development and blockchain. They have no idea. This is like real estate people, too. I was really shocked. So let's demystify this a little bit, and let's bring on Kris Ferranti, a partner over at Shearman and Sterling law firm in New York. Kris, how are you today?
Great. Hey, Ron. Hey, Vicky. Great to be with you. Thanks for having me.
Our pleasure.
Yeah, no, this is great. So I mean, Kris, you've been involved in real estate, and you've been doing a lot of good work in the field and in blockchain, et cetera. Can you just like sort of and tell the audience about your background and maybe a little bit about Shearman and Sterling?
Would love to. Thank you. So you know, as you mentioned, I'm a partner at Shearman. I sit within the real estate group in the New York office. Shearman and Sterling, it's a global full-service law firm. We've got 23 offices, over 850 lawyers around the world. Nearly half our lawyers practice outside the U.S. We have a long and I'd say distinguished 150-year history. But you know, my practice focuses on commercial real estate transactions. And as part of that, I've been spearheading the firm's real estate blockchain tokenization efforts. And also quickly, you know, before we get into the substance, it's also been about 1 full year since Shearman's launch of its Fintech Foundry Initiative. We established what we are referring to as the Fintech Foundry Initiative, and this initiative essentially touches on every facet of the fintech industry, including financial institutions, VCs, accelerators, incubators, startups, policymakers. And over the last year or so, this team has been very closely watching blockchain and digital assets, as well as the other fintech areas like big data, cybersecurity, AI, open banking. Very, very excited to speak to you both today about this topic.
Yeah, and since blockchain is obviously global, you guys are a global firm. That helps you out a lot. And I'm sure that the research that you're doing and getting involved in this industry, you're kind of taking the charge of that. And I mean, you can't get a better target market for this because it's right around the world, and everybody can get involved in this. It's a great industry.
That's absolutely right. I think, you know, Shearman having its global platform, we're, you know, extremely well positioned to be, you know, at the forefront of this, and you know, collaborating across really the entire Shearman platform as we dig further and further into it.
Okay. Well, let me start off by asking one question. Why do you think people should be involved in blockchain, and why is it the face of the future in terms of finance and real estate specifically?
So, in terms of real estate, you know, I think there's now sort of the new L's in real estate, which we all know. You know, location. Now it's liquidity. And you know, real estate today, it's an extremely illiquid asset class, you know, by comparison to other types of investments. I think in the article you cited earlier, I had reported, you know, real estate is discounted by much as 25 to 30% because of its illiquid nature. And you know, just think about that for a moment. That's a really very meaningful loss in value. You know, and there's other reasons people point to. I think all those other deficiencies in real estate, which are sort of solvable by the use of tokenization and blockchain are all that very valid, but they're the same reasons real estate is an illiquid asset class. And so, when people say real estate investing has many barriers to entry, like high investment thresholds, a limited pool of investors, other frictions in transacting, like long transaction timelines, high cost of transacting, lack of transparency, and lack of pricing data. These are all, reasons blockchain is a great use case for sure. But it has the potential of resolving them. But these are all reasons real estate is an illiquid asset class. So, I think unlocking liquidity essentially sums up all the benefits of tokenization. And, these other reasons you can basically just put under the liquidity umbrella.
Are you seeing that more people, as time passes, are getting involved in it because the reduction in the fear factor in terms of tokens and blockchain?
Yeah, I think ultimately this is an educational process, and it's going to take a lot of more information flow, people getting used to the idea of blockchain and tokenization, and as they do, I think we're seeing the different blockchain platforms achieve greater and greater success. And I think over time, as people are educated and people really start to dig in and understand it and get their arms around it, I think, that'll push the growth, further and further as we move along.
How do you see this blockchain technology being used specifically? Are developers looking to raise money for, let's say, a high-rise or shopping centers or multifamily things? What are you seeing in the real world as far as the applications go?
Yeah, so when you think of where you could use blockchain and I think specifically referring to tokenization. People, it's interesting. People oddly have been obsessed with understanding how blockchain technology works. I don't think you've, ever before seen so many people care about, how a technology actually does what it does. People don't ask, how their smartphones send emails or takes pictures. They just care that it can actually do those things. Right. And so in speaking in terms of what this basically does, right, blockchain, at the heart of this, we have a ledger. And it allows an exchange or a new ledger entry to occur without the need of a third-party intermediary. And it's so secure, there's in theory no possibility of fraud, so we eliminate the middleman. And so to get to your question, when we talk about tokenization of real estate, we have to think about which ledgers up and down the capital stack of any real estate project would this technology allow us to replace? So for one, I think ownership interest registries of any entity. So whether that's an investor or a lender, for any given real estate project, they could use this technology. And Delaware and other corporate laws have been amended to specifically permit this. And I think a lot of people have been scratching their heads a bit and can't really seem to understand the difference between a blockchain platform and buying, publicly traded REIT shares or an LP interest in a fund or through a crowdfunding platform, especially REIT shares, because we know with REIT shares, that's already a very liquid market.
Right.
In the case of REIT shares, the difference is that a blockchain platform allows the investor to acquire an interest in an asset or a select group of assets, as opposed to REIT shares where you're investing in a company that is in the business of owning and operating real estate, but it's the difference is asset-driven investing as opposed to company-driven investing. And so this allows investors to really, diversify their portfolios, invest directly in real estate, an asset class that is not necessarily correlated with the stock market. And REIT shares do not necessarily allow for this same type of diversification because in some ways they are correlated. When you look at when REITs are buying back the stock, their own stock in the markets, that's because the REIT shares maybe are going downward, but the asset values are unchanged or rising, and so it's sometimes uncorrelated. And so that's on the REIT side. On the real estate funds or crowdfunding platforms, I think a blockchain platform is unique because it allows investors to come in at much smaller increments because the transaction costs are just so minimized. It's just it's frictionless transacting. And so also a secondary market through a blockchain platform that is interoperable. And when I say interoperable, I basically means blockchain platforms have the ability to speak to one another and allow for cross-platform trading. And so this is a much wider and so much more liquid market.
Yeah, and the liquidity, of course, like you said before, is really the major concern of these investors. I think one of the points of confusion regarding blockchain right now is the fact that there are different blockchains in general, right? I mean, some people put their blockchains on the Ethereum network, and there are other ones too, right? And unlike, let's say, the internet that is just one big superhighway, right? Aren't there a number of different blockchain platforms that people use?
Yeah, absolutely. I think there are a number of different platforms, and so when you think of blockchain, think of the technology itself, and not necessarily the different blockchain platforms out there, but there are different different platforms that could be used to tokenize your interest, and you'd essentially put it on there. And when you think of Ethereum, I mean that is the the token that would get traded, but it's not. I think there's some confusion as far as the protocols or the platforms that are sitting on top of or using the blockchain technology.
Yeah, exactly. And since these are all securities too, from an investor perspective, you still have to be accredited to do this, don't you?
Yeah. So arguably, the most important factor here is securities regs. And so if the digitized ownership interest is a security for purposes of securities regulations, it has to be offered, and is being offered for public sale. You have to register it with the SEC and be compliant with securities regulations. And as you noted with accredited investors, there are exemptions to this through regulations DRS, where you can limit the sales to accredited investors and prohibit transfers for more than 1 year. But I think in terms of real estate tokenization, at the end of the day, you basically have an interest, and because we digitized it and created a digital token, doesn't change what that interest itself is. And so the analysis really does not change in any way. And so when you look at, an entity where you've tokenized its equity, and you put it out, the analysis is no different. So it is something to think about, because it's a little easier, when to put it on that secondary market as a result of blockchain, but ultimately the analysis is the same.
Yes.
Let me, generally real estate transactions involve giant contracts that are full of verbosity, are full of disclaimers, and how does the blockchain and tokens deal with all of those issues that are involved within a real estate contract between parties, and how are people going to feel a little bit of security regarding the aspect of fraud entering into any transactions?
Yeah, so I think you raise a good point. I think on the contracts themselves and being complicated in many ways and complex, including in many covenants, I think that raises a point of who are the investors that are benefited by tokenization. And your point on the covenants, I think raises a good point in that it's unlikely to be very beneficial to large institutional type investors. And when you think of these types of investors, they're typically investing a significant portion, of the equity or the debt for a given project. And so they are negotiating special rights, covenants with the sponsor. These are very complicated arrangements. The negotiations take a lot of time. The terms are, often subjective in nature. They include things like, reasonableness qualifiers and materiality. And it's not possible today, for enforcement of these terms through things like smart contract technology. Smart contracts are limited by very basic if-then coding. And so, which basically means if X occurs, then Y just automatically occurs. At some point, maybe in the future, you could have AI come into the fold where it would allow for more advanced enforcement. But until then, the only way to really enforce these more complex terms would be through what we call oracles, which are essentially third parties who act as referees and can step in if they think a covenant has been breached. But then you're basically introducing third-party intermediaries, which is the very thing we were aiming to eliminate by the use of blockchain. And so, as a result, I think a lot of the token investors to date have primarily been minority stakeholders with passive, non-controlling interest, and so their governance rights were pretty limited to begin with, and so there's not a lot of enforcement that needs to be monitored.
Well, talk to us about the type of investors that would be using a blockchain or tokens for real estate investment or any kind of investment, regardless of the industry.
Well, I think for the very reason that the enforcement issue on covenants, I think what you're going to see are the investors that are interested in minority non-controlling interests, and this unlocks tremendous potential to open the market out to people who otherwise couldn't get involved before because of the barriers to entry. And so you have regular investors, regular people who are now able to invest directly in a real estate asset where maybe they were limited before to buying through REIT shares or other means of pooling their investment dollars. But now they can actually pick and choose real estate assets because you can fractionalize the token so greatly without risking increasing transaction expenses. And so I think the greatest benefit will be for those investors, where large institutional type investors, it's great. This will reduce their transaction expenses. That's positive for sure. But for these investments by comparison, it's the transaction expenses are a small percentage of their overall investment, and so for them, it's not going to be worth the minority passive investment. They would prefer the governance rights and the protections that come with a longer transaction timeline.
What do you see as basically the negative impact of using tokens or the blockchain?
So I think that the secondary market in the blockchain will create a more efficient market for an asset. But I think while this could be viewed as a blessing, it could also be viewed as a curse and and a negative. And so first let me explain sort of the blessing side of it. I think it's a blessing because when you're acquiring directly in real estate, we have all these ways of determining the value of it. You have sales comparison analysis, a cost basis approach. You can apply the NOI to the cap rate, and then of course discounted cash flow analysis. But it's a very inefficient market. You you're projecting into the future, but the data and information that you're inputting to generate the projections are all based on historical information. And, some of that historical information could be months old. And then even after you've priced the asset, you might not close for another few months from that date. So when you think about that versus the stock market, in the stock market, we would call this an option contract where you've got, the consideration is the hard deposit. But if you create a secondary market where investors are freely transferring interest and pricing data of those trades is transparent, you've created a way more efficient market for that asset that will be priced in real time, based on the most current information available to those investors, and likely a way more robust set of data points than ever before. You're likely to have, movement in trading because of the financial status of commercial tenants in the building. So similar to the stock market, where stock prices take into account, data and information up to the very moment of making the trade, we could, potentially have this as it relates to a particular real estate asset. So that's the benefit. But, to your point or your question, what's the negative? I think in some ways real estate has benefited from being in an inefficient market. I suppose, but, with the benefit of liquidity and constant pricing, we potentially introduced the drawback of volatility. And so even if, volatility always existed, and you have, your ownership of a real estate asset, in theory is the value of it is moving on a daily basis, you are less likely to really bear that out when you are not valuing that asset until the next capital event, or maybe more frequently if due to accounting or other internal requirements, you had to bring it mark to market accounting or other requirements. But there's a secondary market pricing. You're in real time. There's no way to hide the volatility. And so I think this introduces new issues like when you're thinking of loan covenants. Are you at constant risk of triggering LTV requirements if, for example, bad information sharply turns the token pricing downward? Also, I think, when you think of sponsors, they're less likely to want that volatility risk as they're seeking bids for an exit or a refi. And, this is especially bad if you've only tokenized a small portion of the whole capital stack, because you now have this, small portion sort of dictating the value of the entire capital stack.
Yeah, that's an interesting point, too. We've kind of been taking this from an investor perspective, but let's talk. You mentioned sponsors before. A lot of sponsors and syndicators are looking at the blockchain, and that's getting a little bit popular with these guys. From a legal perspective, if these guys come to you, what are some of the concerns that they should be aware of that you could help them out with or guide them in the right direction in terms of getting this thing started?
Well, I think I think the biggest concern. Well, first, the sponsors are taking a very hard look at this because it's a much wider access to capital for them, and it's a new source of capital that didn't exist before for a lot of real estate sponsors. But the risks is it's sort of new, and there's a lot of unknowns, and how will lenders take this sort of view this in light of some of the issues we've already talked about. So a lot of their concern is how do we structure this in a way that will not reduce the financeability of my building, will give me a lot of the freedom I need to do what I want with the project and stabilize it, lease it up, without being hampered in any way. And I do think just like the investors, there's an education process going on for the sponsors. They're weighing the benefits versus the drawbacks. But it's a lot of what we are doing here is creating blockchain compliant documentation to allow for the interest to be tokenized, whether presently or in the future. And so we've been, that's a discussion point we've been having with sponsors as well.
I see the blockchain because of it, just because of its nature, that real estate can now be developed and invested in across the entire world. It's not just limited to here, and the ease of investing in China or investing in Israel or investing in Canada. All of this makes blockchain makes investing much easier. What do you think about that?
Yeah, for sure. I mean, I think development is all about raising capital, and anything that allows for the raising of capital on a wider scale is going to improve that on a global scale. And so I think blockchain opens it up to what is currently sort of a limited pool of investors by comparison to the entire population, right? I mean, when you think of the potentials of blockchain and allowing regular everyday people to invest where they couldn't before, I mean, you have a tremendously bigger pool of investors that you didn't have before.
Well, and plus you don't have just the traditional investor. You have people that are just entering into the concept of real estate investing because of the ease of tokens and blockchain. And that's, I would think that's incredible.
Agreed. Yeah, no, it's incredible.
And another thing, Kris, are you guys doing any kind of marketing for this? Any workshops or seminars or things like that with Shearman and Sterling?
Absolutely. We, as part of that Fintech Foundry Initiative, one of the pillars of that has been education and thought leadership and putting out content and bringing people together. We've set up conferences and roundtable discussions. We've put out a lot of articles and other content. And so we are, very actively doing those things.
Yeah, I got to commend you on that, because when we started looking into articles and getting educated on this topic ourselves, we saw your name pop up a lot, and that's one of the reasons why we reached out to you. And specifically, the one that you wrote, I think it was a CRE Tokenization, a path for enhanced liquidity. That was a really great article that you wrote, and it's all over the place. I encourage everyone to read it. We'll link it in the show notes as well. But I'm glad you're doing that, because obviously this is a topic that needs a lot of education, and you're doing a great job at it for sure.
Well, great.
Exactly.
Thank you so much. Thank you.
And real education, not because there's a lot of falsehoods out there about blockchain and tokens, and you need to let people know what the real true facts are, so that they're not afraid to at least investigate into it and be a part of it. It's a brand new world coming.
Absolutely.
Yeah, it sure is. It sure is. And lastly, Kris, if someone's listening to this podcast, I'm sure they're going to have questions or follow-ups or whatever. If someone needs to get a hold of you, what's the best way to do that?
Somebody could look me up on the Shearman website. It's Shearman.com, and my contact information is there. If you could look me up, right through that website.
Great.
And
like I said before,
SAARMAN.com.
Yep. Okay. I'm going to link that in the show notes as well. So, yeah, this is great stuff. I'm really, really happy that you took the time out to come on our show and educate us on this. So I really appreciate your time.
Yeah, no, great. Thank you so much. I really appreciate it.
And Vicki, do you have any last questions before we close this podcast out?
Well, I do have one last question, but it might be kind of long. I was just going to say, what is the SEC impact into all of this? Or is that just a way too long of an answer?
It's a long answer. It's a long answer.
Give us the bullet point.
Or what we could do is we could bring Kris on for another podcast maybe one of these days and take care of it then. So that's probably
even a better idea.
Yeah, we're really running out of time here. Yeah. But okay, well, listen, folks. Again, thank you, Kris, for being a guest. Vicky, thanks for co-hosting the podcast with me. People out there, you're listening to the Mappable USA podcast at mappableusa.com, where we put you on the map. Go to our website, scroll down. You'll see a whole bunch of syndication sources. Pick the one you like best so you never miss another Mappable episode. If you want to be a guest on the show, like Kris was today, there's a guest tab there. Fill that out. We'll see what we can do about getting you on the next show. So thank you, everyone, for subscribing. Thanks for all your support. And we look forward to another Mappable USA podcast. We'll see you all next week. Thank you, everyone. Have a great week.